All right. So are we close enough? That is the question. And, looking at, let's just open this up here a little bit. This wide, whippy outside day versus the inside day that we had. And now prices are pushing up into this congestion here. You can see the tail inside this area and then this other tail. So let's take a look at that. What not to like? The market sucks as many people as it can. Well, it's not going up, meaning it hasn't been going up. I mean, to suck in. If you mean that got them to sell at the low, yeah, that's always the emotion part. What I mean is not to like is that, okay, so here's this, erratic turn. The way it came down, the bottoming tail, up, down, wherever it closed, this outside day. And we're looking at the futures here. We're not looking at, the cash or the spider. So it's 24 hours. Yesterday's reversal day, which doesn't look so impressive when we get to the NASDAQ. And now it's pushing up into resistance up here. So maybe it gets a bit further, but it's chasing here a little bit to try and get on board here. As far as put spreads go, if you can find premium, and that's what Dan's going to look for, of course, if it's far enough away, a short amount of time, I think that's all fantastic. I do think, just based on historical patterns, and we've got, 6 days? 6 days to this midterm election, which is, who knows what's going to happen with that, or what the reaction would be, whoever our opinions are as to that. But the ideal scenario where I was looking for here, the retest pattern, which in some markets, when you look at them, was there, but it never triggered above the prior bar's high. So there was no entry. So now we're down here. And the perfect scenario would be, okay, if it gets up here a little bit more, it comes down here. And I'm telling you, if we get that pattern coming down here with our internals already cooked, it's time to go all in. And then, scale out, use your own money management, of course, but it's time to press the accelerator a bit with that type of a pattern. Now, that being said, I'm seeing some patterns already, like Square yesterday. I don't care for the way it was a grinder to the downside, which tells me it's not going to go up, probably like a blast off kind of thing, but that's okay. This pattern tells me don't even think to raise the stop too fast, and you're going to give back some profit at somewhere along the line and just let it do its wiggles, and it should work out because of where the market's at. So, you see a similar thing, it's up here and it's in a downtrend and coming up into resistance on the hourly time frame. So common sense says it's going to come back in. How much, I don't know, or whether it goes sideways, we just have to see. But a lot of these stocks are in downtrends. They're coming into resistance, and there should be a reaction to that. So that's some of what we're going to be looking to see and analyze. Go back to the spiders here. Came down to the area of this initial target down here, which was about a measured move. I don't have that. That was in the video that I sent out last night. This measured move here. And, the way it was acting on the prior day, it kind of looked like it should come down to the next level. Maybe that's not in the cards here. If we do get the retest pattern where it pops up and then comes down, maybe we do get a touch of this low here. But as you can see here, you're getting up into an area of resistance. It bottomed out down here. Tells me this is not the place to be jumping on board. Not unless you're willing to put your stop down here, and that's okay. As long as you're willing to give it, the room to wiggle, there's nothing wrong with that. You're near a turn, but just looking at this chart where a second. I mean, look, it's obvious. This is just going down. And it's lower high bars. And right now, today, 270, 60. I don't know if it's above that high, but give or take. Oh, we can see if it is, right? We have the tools. It is. So the prior high is 270.25. So it's just above it. So it's breaking above a prior bar's high. I guess that's it right there. And it's up against the next one. And this is what a self-correcting type of choppy trend offers. Lots of reference points of resistance. So I believe that as this is going up, and this is a start of probably the turn, some kind of pattern should set up in the next few days, whether it's a complete retest, whether it's some type of a continuation pattern, where there's going to be an attempt to push lower. Now, of course, that does present the risk now of missing the move. So when we find things that look okay, let's say okay, but we have to use big stops, I think we're going to have to do that in part and just say, you know what, while it might seem ridiculous to use an 8-point stop, which would require a smaller than normal position size, there's really nothing wrong with that, because the goal here is to have some positions and then look to add to them. And I don't know how that's going to shape up. Nobody does. If it runs too far, well, we're going to have to sell those little positions and take the money and then reassess for re-entry, because the continuation pattern or the retest pattern isn't going to happen. So we're just going to have to assess that as it unfolds. Russell pushing up above some resistance here, and that was hanging out for several days. I talked about the fact that what leads the way down often begins to bottom out and begin to lead higher first. Right? So the stronger ones played catch up on the way down, and what's strong and leads on the way up, then the laggards tend to play catch up with what was strong. It's just kind of how the market works with relative strength and relative weakness. Transports, looks like that dot. They don't trade much pre-market, but it looks like they're down a little bit. I don't know. We'll see. But we've got a wide range reversal bar here suggesting a tradable low. And then bonds are down here a little bit. No big deal. We have oil here retesting. Looks like it was up a little bit and now it's not. It's pulling back in, but it's got a choppy mess up above here. So it's definitely in an area where buyers should begin to step up. And you can see the bottoming tail that occurred when it poked down toward this prior low. So even though this is below its open and it's got a topping tail here, there's a long way to go in the day. And if this turns out to be a green day, you're a crude oil trader, or maybe even USO, that would be a buy. You get a nice green bar pushing up to the high of the prior bar there. And again, this trades 24 hours. It's the futures. It's USO isn't going to look exactly like it, but you got the idea. And gold is pulling back here a little bit. It's still within the halfway mark, give or take, of the wide range bar. I mean, it is a bottoming pattern. I just kind of eyeball that halfway mark and being there as it's coming down to it, where buyers should begin to step up if they're going to. Repeat the concept of wide range bars being multiple bar moves in a smaller time frame and create voids. So that type of bar has to create support, and that's what it was doing. And then sellers, showed up at the resistance. So bottoming patterns tend to be whippy and erratic, and So there's the idea, right? If you haven't seen it before, it's a pretty powerful concept. And to understand it, that this bar is a momentum bar displaying explosive strength, but it's the weakest link in the chart. So it has to create support. And when it fails, it opens up the door to complete failure unless buyers come in at some arbitrary point like minor support and it reverse it back up again. Because as you can see here, multiple bar move in a smaller time frame. That's a void. There's no support in here. So this could potentially fall all the way back down. So that's the unknown when it comes to that, or whether for whatever reason buyers want to show up here, just based on some subjective reference point like this support level here, and you look inside this bar, as I showed you, there's nothing there. But this is how technical analysis works. There are things that are used that are not real, so to speak. Open the door to what? This collapsing all the way back down to the bottom, down here, Frank. That's what it opens up the door to, because this, I'm going to just show you a little bit more clarity. When we trade off of reference points called support and resistance, like this move up was a momentum move. This created a pivot right here. And then it retested and buyer showed up again. This is a beautiful picture of creating support and a W bottom, and then prices rallied. Right? They couldn't get all that far, but if you're an intraday trader using this pattern, it's a strategy that's worth doing. Now, as time went on, and it retested again and it went up, and then, hey, I'm trying to get through here, but the sellers are beating down the buyers. That supply is coming in and knocking them back down again. And this was the coffin nail here on this 60-minute chart, where it broke out with a big wide range bar and slammed right back in again. It was as if, hey, the buyers gave it their last try and they threw everything at it. And the sellers came in and said, sorry, not this time, and just crushed them. And at that point, the buyers were like, it's not working. Let me just take my money, whatever, if they entered here or here, and saying, you know what, looked great here. I had X, Y. I'd rather walk away with something in my pocket than potentially risk a loser. And now as this moving down, what are they going to buy against? I mean, this is how we work as technical traders. We want to buy against some reference point. And the idea of this wide range bar being a momentum move, I have nothing to trade against. That's real. So what am I going to do? Well, I can say, well, maybe this subjective reference point holds. Maybe it's coming all the way down here where I'm willing to give it another shot. Or the other strategy or concept is, hey, if this was to form a pivot and turn back up again and retest it, that would then create an area of support where there is none. And I'd say, let's give that a shot on the long side. Right? And this is, and those that are on YouTube watching this, and you go to these webinars and get enamored by the guy with all the Fibonacci lines or the 52 trend lines, that one of them is going to catch the turn, right? They'll have all their symmetry and lines back and forth. And it's like, okay, here's where this was our target and it formed the W and went up. Well, you don't need all the squiggly lines. If you see the pattern show up here, go for it. Just because you got 100 lines on your chart doesn't give you, any more reason to do it, because that is all bogus stuff, hocus pocus analysis. In any event, that's a whole nother conversation that I would love to have. And we'll do that on MT Live one day, because that's kind of like my pet peeve with all of these indicators and fib lines and Gann lines and trend lines and ridiculous stuff that people are taught within this industry. So anyway, Facebook was the big news. Where is it at? It's having pretty good darn morning here. Overnight, it was at just over 150, 151. Now it's at 155. So that's a pretty nice move for that. And that's, I guess, a positive for the market for a stock like Facebook to start showing some life. And Amazon, which was getting shellacked yesterday, where are you at? Not so impressive. Not so impressive. So I guess today it's Facebook, and we'll see how others are shaping up here. As I mentioned, the Square is up a couple of bucks already, and Netflix is up about $10. So, but just remember, these things have fallen pretty sharply. So they typically do not get up and make, a sprint and without coming back in again. So that's it. Dan, all yours.
All right, thanks. Good morning. Yeah, as I mentioned, and I, sent a text out to our subscribers that I'm going to be totally focused on, unless we find something very unique on its own page for a swing or day trade, of course. I'm going to be focused on watching the market the first 30 minutes for setup and start selling these put spreads. The implied volatility rank of the SPY is at 95, which is very good. I don't like this big gap up, of course. It makes it harder. We're having a chase now, but finally, this is going to, provided we close green, which I shouldn't, as of now, have no reason to suspect we won't, then this is going to be the first 2 consecutive green bars. And, we had a nice move into the close yesterday. I was tempted to start doing some things right there. And I said, no, let's just wait and see if there's follow through in the morning. And it's a risk to reward of holding overnight. We only have 2 open positions. So